Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So in recent week, if we will not take into consideration any political events, the most important thing was not even the European Central Bank meeting, because there was actually no surprise in the statement. As you can see, market even hasn't shown any reaction on Christine Lagarde's speech, but release of the gross domestic product and consumption expenditures. And it was surprisingly too good to believe. As we have tried to dig this subject a bit deeper in today's report, there are major two points. And first of all, we suggest that it's really big manipulation of the statistics right now in the United States. Not even with the putting that just some kind of the wrong numbers, let's call it in this way. But mostly this is done by adjustments of the methodology of calculation. So previously we already saw the same adjustment for CPI calculation. Then it's a lot of tricky games around seasonal adjustments, non-seasonal adjustment payrolls, and initial claims. Right now, so it's ton of the gross domestic product. So it was totally revised since 1947, starting of the observations. And well, many different adjustments have been made. So in a dry residual, we've got higher growth and lower inflation. We have put some details in the analysis, but this is only the minor part of the general problem. So this is not what the report dedicated to. So it's just minor text on this moments. The most problem is that actually the growth of the domestic product is financed totally by the budget deficit. And it explains why economy was able to show the 4.9% growth. This is some kind of the Chinese speed of the pace of the economy, which is unbelievable for the United States in current situation. So we have tried to dig it a bit deeper and provide you some indirect indicators that we believe are more reliable, and that if you combine them together, take a look at them, you will get clearer understanding what's really going on, and which is actually hardly correspond to numbers that we've got in the gross domestic product. So just take a look, it's really fun to read. So speaking on the technical side, you could see here on the daily chart we have to recall our Friday discussion. So on Friday we said that here we have the grabber on the dollar index and on the cable, and we said that we are not considering taking short position on the daily chart until the situation will be resolved with it. As a result, on Friday we have some volatility, but in fact market goes nowhere, forming indecision situation, forming this doji. But at the same time we could see that on the dollar index once again we've got another grabber, which just confirms the previous pattern. What we're gonna do in the current situation, by the way, we also have just 2 sessions until the end of the October, and I would even exclude the 31st of the October because this will be the Halloween, and well, as you understand, it's not quite a working day. So in the current environment, we have to keep in mind that on the daily chart with the grabbers on the back, it's not a good idea for taking new short position. We have to wait when the situation with the grabber will be resolved. At the same time, from the technical point of view, it is possible to take the long position because we have nominal trend bullish and we have grabbers bullish patterns. That's actually all that we need for position taking. But at the same time, here another factor exists as a general environment concerning Middle East conflict and the role of the United States in this conflict. And I suspect that once again we get an escalation of the conflict right in the holidays. And I suspect that on Monday we could get downside gap opening on euro. That's why this is a bit personal decision that you have to make. As I said, from the technical point of view, there is no mistake for considering taking the long position based on these patterns and trend direction. But here you have to just decide how the degree of the risk that you are ready to take is acceptable to you. So maybe personally, I do not want to buy with this environment. We will see what will happen on Monday morning. But taking it all together, I have some, well, not very comfortable psychological condition just to make the decision on the long entry. But, well, people are different, and actually for somebody it might be interesting background for taking the position, and maybe they will be right. So I'm just sharing with you the technical picture and let you to make the decision in current situation, because it demands not only the technical background but also some personal specific and your risk level that you're ready to take. So on lower time frame, we haven't got the double repo here because market hasn't closed below the 3x3, but we could say that we have a kind of the double bread and butter lookalike, which is because we have just more closing above the 3x3, but at the same time 30% level has been reached and retracement started. Currently bread and butter hasn't quite reached the target, but mostly we could say that probably it is done. So if you have taken position with this, you probably could try to keep short position with the break-even stop and see what will happen. Because if geopolitical factor works, we could get the downside breakout and downside continuation. Market could erase the grabbers. If not, well, you just could close the position on the normal target of the bread and butter. That will be approximately the same 105.40, 105.50 area. That level, by the way, if grabber will be valid, is a possible level that the bulls could consider. If you still decide to take the position based on the grabbers, that probably also the target of this downside bread and butter might be interesting because it minimizes your risk and, well, potentially make it more attractive to consider taking the position. On the hourly chart, you could see that these minor hand shoulders that we were considered, if we could call it as hand shoulders, mostly is done. So the ABCD pattern is completed. Pullback has started precisely from the confluence that we have specified. Retesting of these lows is dropping down. So right at this point, I do not see something really interesting for taking the new position. So that being said, as a bottom line, if you have bearish position, you could try to keep it, move stops to the break-in, see what will happen. Gap down opening and erasing of the grabbers lets you to keep it even longer because market just could keep going down. If grabber will survive and market will just open this area, think about position closing somewhere around bread and butter target. For the bulls, if grabbers will survive as well, that will be a chance to consider taking the long position if you're ready to take geopolitical risk. So that in 2 words that we could say. Concerning the bread and butter contradiction to the grabbers, in fact, bread and butter doesn't contradict it because bread and butter doesn't suggest drop below the lows as a minimum target. As you know, the minimum target of the bread and butter just 618 retracements of the whole upward action, and from that standpoint, it doesn't have the target. Of the erasing of the grabber. So from that standpoint, it doesn't contradict. So both patterns in this scenario could be traded together. Besides, they are on a different time scale. If the bread and butter stands mostly on the fall time frame chart, grabbers are on a daily. So there is no really a contradiction between them. Well, that's actually all that I would like to say. Let's see what we get on Monday.